Kriya Patel, thank you for coming today, specialist from payment industry. Thanks for coming on Blockchain Rock.
Hi, thank you for inviting me.
Thank you for being here. So you're the managing director at Transact Payments, and maybe we can start by, we'd be grateful if you could give a bit of background as to what Transact Payment does, maybe some background, some history,
Sure.
and then we'll take it from there.
Sure, absolutely. So my favorite topic, Transact Payments. So I'm the managing director of Transact Payments. Transact Payments is an electronic money institution. We're regulated here by the Gibraltar FSC, headquartered here. We also have an office in the UK, and shortly, because of the Brexit planning strategy, we will also have an establishment in Malta with a team there under a secondary license. What do we do with our e-money permissions? We have two main service offerings. We are members of MasterCard and Visa, which enables us to provide services for clients who want to deliver prepaid, debit and credit card solutions across the EEA. This includes solutions such as alternatives to traditional current accounts, known as banking light, trying to help leverage and deliver solutions to allow unbanked folks to get into the financial ecosystem, right through to everyday gift cards that you might find in a Westfield store or
prepaid card
prepaid
like Apple
cards.
on the Apple Store and
Exactly, and everything in between.
Sorry, would this card? I'm curious. Would this card employ Visa or MasterCard?
That's right.
So
we're members of Visa and MasterCard.
Okay.
So under our membership with MasterCard and Visa, we're allowed to sponsor partners to be able to deliver card solutions. So in our portfolio, we have everything from fully licensed banks who outsource this service provision to ourselves, because our 100% focus is on managing payments and card solutions and dealing with the complexities that exist in that ecosystem, right down to fintechs. So companies who have built some fantastic solutions and really need the support of companies like ourselves who bring regulatory experience, financial services experience, in order to allow them and facilitate them to take a financial instrument like a card into their desired customer database or target market. So if you think of Revolut is something that started as a prepaid card, issued by an institution like ourselves.
So like Monzo, those challenger banks.
Monzo started as a prepaid card and is now a fully licensed bank. And in our portfolio today, we have partners, like I said, who are banks, fully licensed, right down to electronic money institutions who are looking for support from us, credit institutions who are wanting to deliver a credit card solution but really only want to manage the credit facility and ask us to manage the payments piece, and then the fully fledged replacement of current accounts or banking light products as we call them. And this is if you look at a lot of the companies you've just mentioned, they started off with prepaid but actually are now providing full banking solutions.
I see.
So that's one of our core service offerings at Transact Payments. A second service offering is we're seeing that there's a real limitation for companies to get access to banking. So one of the things that we've developed with a number of banking partners and technology partners is solutions for the corporate space. So if you're a business and you're looking for business banking solutions and you're looking for that to be supported cross-border in multi-currency, we've been able to deliver some initiatives on that. Today we support a private bank locally for their US dollar payment management. We also support a number of companies in the UK who have the payment requirements. And that's a pretty growing sector, especially in Gibraltar, because I think in Gibraltar there is a need for more competition on the banking side. And so we're seeing a lot of interest to see if we can support that too.
Why do you think businesses are experiencing this, complexity of opening bank account? Is the KYC processes because those businesses operate in more innovative form of technology that perhaps is not as welcomed by the traditional bank? Why? What's the reason?
You'd be surprised. Even the most traditional of businesses are struggling to get access to banking. So don't think this is just a situation that's been derived from the fintech or the creation of the fintech market. Although the fintech sector is struggling with that. We as an electronic money institution have our own challenges getting banked. And I think the reality is that traditional banks have taken a real hammering with regulation, dealing with changing and evolving their legacy systems, and they can't move at the same pace that fintechs can. You look at where the disruption and the advancements in the financial services sector have come from over the last 10 years. It's come from the birth of the fintech sector. Yeah. And for my sins, I've been in payments and banking since 1997. My first exploration into electronic payments started in 2001, before the word fintech even existed.
Yeah.
Really what it took was, I'm from a banking background, and I had a number of colleagues. We got together and we said, we've spent a fortune in building this really robust system that can deal with scale, is super compliant, is meeting all the regulatory needs and future regulatory needs that we feel that will come onto the landscape. Why can't we provide this to other financial institutions who maybe do not have the same financial resources or the human resources to be able to meet the compliance requirements and the ever-changing regulatory environment that financial services are now witnessing. So this is roll right back to 2000, right? 2001. And we got together, we were quite entrepreneurial for bankers, and we started to look at our systems and we started to offer that as a white label solution. So this is way before fintech existed as a word. But if you were a bank or a financial institution and you needed a system, who better to get it from than another financial institution who's doing exactly the same things you are, understands the same problems you have, and how to resolve those. So I see that was an early adopter stage, and through that process, through the early 2000s, we were one of the first institutions in the UK and the whole of Europe to deliver an electronic payment solution using a prepaid card. Okay. And it was a gift card in the Bullring Shopping Centre on the MasterCard brand. Fast forward to what we're doing now, and the likes of Revolut and Monzo and all of these new challenges that come into the space. I don't know whether they would exist or how they would exist, and whether they could accelerate their roadmap if there wasn't pioneers back in the day. And I'm not the only one. I'm not sort of kind of saying there was a few of us and there's a few competitors in that space. But now it's a super competitive space, and electronic money has been historically a good breeding ground for allowing fintech to accelerate. The problem is when you go back to traditional bankers and their legacy systems and their legacy way of thinking, and they've been hit with huge fines for AML breaches before any of this existed. Unfortunately, it's caused them to kind of review their risk policies. And reviewing of risk policy means that appetite to support solutions with the provision of banking services, which I think is a basic need for humans, but also for businesses, right? Yeah. So it's not just an individual issue. We talk about the unbanked and that being an issue for individuals. I actually think it's equally as big an issue for businesses. Yeah. And if a business cannot get a core primary need, which is banking, how can it survive?
No, in a way, it's actually probably more stringent as a limitation on a business, because you need it for compliance sake, you need it in order to provide a service. An individual, even without having, the bank individual, of course, it doesn't enjoy the same level of access as a banked individual that a bank individual has. But at the same time, a corporate, like a business without a bank, is not a business. It wouldn't be. It could not incorporate.
Absolutely. So if I look at our business activity in 2018. Of the two product strands I mentioned, 95% of our activity in terms of dollars, in terms of value as well as transactional volume, was corporate-based solutions. Whether that was provisioning of payroll programs, whether that was corporate expense management solutions, whether that was making cost-effective solutions for companies to purchase online and pay suppliers and receive invoices. We were using electronic money and card payment solutions as the alternative for companies who struggle to get banked.
So you're an enabler.
We're an enabler.
Okay, so it's mainly a business to business.
Our clients are businesses.
Okay.
Our clients will have customers. Some of our clients will have corporates as their customers. So it might not be an individual.
So it might be a multi-layered framework of like a business to business until eventually it reach the end customer.
Exactly. And that end customer could be a business in its own right, or it could be a business with employees who are the end card holders, or it could be an individual, and we do both. We provide consumer services as well, but just to kind of put context that our focus and our expertise is in that B2B space. Having said that, what we've realized is that easily translates to a consumer model as well. And so we've been particularly successful in attracting quite a lot of customers over the last 12 months who want to deliver a consumer retail alternative to bank accounts or payment solutions. And so that's what Transact Payments does. That's the kind of solutions we provide. I'm going to giving you a bit of background on myself. So before I moved to Gibraltar in 2014, I was working for a number of different businesses, but they were all subsidiaries owned by a building society based in the northeast of England called Newcastle Building Society. And
but can I just interrupt you a moment? There is something that you mentioned under the previous question, which I found interesting. You said that, of course, having access to banking and at a fast pace is almost a basic need nowadays for human being. How do you reconcile that with safeguarding investors and safeguarding the interest of the multiple stakeholder, especially in light of 2008 and in light of all of the risk that a globalized market as the one that we are experiencing today brings with it? So how do you reconcile these two components?
So there's two parts to that, I guess. Two main parts is we're a regulated company. Under our electronic money permissions, one of our core requirements is to safeguard 100% of any client funds that we hold. Yeah. So if you think about a bank and you have a bank account, and I'm sure you get paid handsomely, so if you have more than £85,000 with a bank, anything over above £85,000 if that bank fails, is lost.
Yeah.
You could only guaranteed under a financial services compensation scheme the first 85,000 that you hold with any institution. With an electronic money institution, 100% of the funds that you hold with us have to be safeguarded. So if something happened to TPL or any other e-money institution and it failed, those funds would always be ring-fenced and protected from any creditors of TPL. So we actually provide security in terms of assurance related to that under our permissions, because that's how the regulatory framework to license an e-money institution works. The second thing that underpins all of this is we have stringent controls on onboarding. So we follow bank level onboarding processes. That's why we have multiple banking partners who are happy for us to provision these services. The second thing is, on top of that, we obviously fully adhere to the anti-money laundering directives. We're on the 4th iteration now. Our team has already, in the compliance area, reviewed the 5th version. We're active in 23 countries across the EU. All of our services we provide purely in the EU and the EEA. We're passported across all of the member states. So one thing is, we recognise the complexity of regulation and cross-bordering. So what we do is we take each country's requirements into account with any services we provide. So when someone onboards with us, they have the assurance of understanding that we comply with the same regulations that the banks do. We have extra regulatory requirements around safeguarding of funds that protect customers' funds 100%. And the third piece on that is the fact that we prove that by the fact that we're cleared by MasterCard and Visa to provision these services. Yeah. We're also cleared by all the banks that we work with to provision these services. And in fact, I tell you where the future of the banking sector is going. It's partner, acquire, or die, right? So you either partner with fintechs because your legacy systems and you can't build them out as quickly enough. You buy fintechs so that you automatically acquire a solution to take to the market to compete. And what was the third one I said? Oh, die. And I hope that banks don't die, because they play such an important role in the ecosystem. But actually, I feel for the banks. There's challenges there. I'm an ex-banker myself, and I just think there's a reality check to be had, which is what can we feasibly do and still meet the scrutiny and the controls and the regulatory requirements we have. I find it sometimes that banks will use regulation as an excuse not to do business. And I think you mentioned it earlier, we're an enabler, we're a facilitator. So I feel it's almost my job to be able to find solutions for the market where there isn't one.
In a way, it's interesting because fintech, everyone claims, that fintech solution, like especially when you start looking at crypto assets or cryptocurrency, depending on like how you consider them to be, it's seen as a way to take out the middleman from the picture. Mm-hmm. But in reality, in a way, if you look at it if you look at it from an ecosystem perspective, right? If you look at businesses and how they would be able to adopt crypto asset or cryptocurrencies, it seems actually to insert an opportunity to create a new middleman, which is the fintech institution or the fintech business that is, as you said, either acquired or is partnering with a more traditional bank. So in a way, yes, maybe for the end customer or the private customer, purchasing crypto such as Bitcoin, also because there are different types, might be a way of liberating itself from middlemen. But from the corporate aspect, actually to provide that end user that service, you need to introduce more middlemen, no?
Well, this is almost a vicious circle, as I say it, right? So you want technology to advance unthrottled, right? Unrestricted, because that's where innovation comes from. That's where the real smart ideas come in, and that's what changes the way that consumers interact with everyday instruments, whether it's a financial instrument or whether it's something else, right? If you think the world, could you imagine a world without Facebook anymore, or Instagram, or WhatsApp, right? You just couldn't, right? That you naturally just gravitate to something because it makes your life more enjoyable or easier.
Changes
right?
culture.
It removes its fiction and it changes your cultural approach, right? The way I look at this when it pertains to financial services, whether it's DLT, whether it's traditional fintech, whether it's traditional banks, is that the vicious circle is you want to allow technology to be developed by those guys who are real pioneers without any barriers. But the reality check to that is when it comes to financial services is it still needs to then adhere to regulatory controls and key protocols.
You want your money to be secure, because otherwise...
Exactly. So you want all that friction removed, but you want all the security that a traditional bank gives you. So something's got to give. I mean, my view on this is that there's a middle ground to be had. I actually think that you're always going to want the assurance of what the banks give you, what a financial services regulated company will give you. What you can do, though, is align with certain technology service solutions, whether that's DLT and the removal of, pretty expensive costs
fees
to move money around, especially on a global basis. But it still has to be underpinned by trusted partners. And I think that that's where DLT's not quite got to. Crypto hasn't quite got to that
trustworthiness and credibility.
And if you're going to bring middleware into that process, whether that's technology or whether that's licensed service providers or whether that's regulation or whatever it is, that's not quite there yet. And once it is there, I do think that there's going to be a steeper adoption and a much more comfortable environment for the DLT space. I'll give you a good example, the recent announcement by Facebook about Libra. So if I broke that down into some components, you ask a purist on the blockchain DLT side, they'll say it's not blockchain. And they're right. If you ask the opportunistic individual, the trader who's been trading in Bitcoin and Ethereum and other cryptocurrencies and altcoins, they'll say this is not attractive to me because it's a stable coin in essence, right? It's backed by fiat, so they can't make the value from this as they would from what they've been doing in the traditional space through exchanges. But actually, for me, what I find is really interesting is this is a big driver. This is a significant driver. You talk about the middleware. We're talking about MasterCard. We're talking about Visa. We're talking about Vodafone. We're talking about Stripe. We're talking about Spotify. We're talking about eBay. We're talking about Uber. You think about all of those interactions with those who are merchants. They're all electronic interactions. You talk about the payment networks like the MasterCard and Visa. That's a genuine interest to say, how do we align? Or is there value in aligning? And the biggest thing with this is when you talk about digital assets or current cryptocurrency, whatever you want to call it, anything in that DLT space, you still got to move money from the real world into the digital world. And you've got to move money out of the digital world back into the real world. And these guys are all operators around the ecosystem in the real world. So aligning something like Libra could be a significant step. It's too early to tell. I don't have a crystal ball to predict what future is, but I actually do think it's an interesting step to say we've got serious players now showing a significant interest.
I completely agree with you on that.
And I think the biggest thing that could come out of this, it may be that Libra and Calibra the wallet. I think Calibra the wallet is really the bit I think is really interesting for financial services. I'll tell you why. When you're working in the online space or the digital space, why do we still have a KYC process that says, here's my passport, here's my utility bill, here's my driving license, right? Yeah. Surely we should be able to utilize digital identities or move towards portable digital identities as something that can be utilized in that space. Now, what will drive the adoption of that? Consumers, because they want frictionless access, but actually trust.
Yeah.
These are the kind of companies, to some extent, that you're going to trust more than somebody that you've never heard of, or the worry that everyone perceives DLT as high risk, right? So I actually think this could be the stepping stone of creating an ecosystem in the digital space which is now more tried, trusted, and will eliminate friction. So Libra might not be here in 5 years' time. Calibra might not be here, but the adoption of a digital
seed
identity
of inception is there
could
now.
be
Yeah,
huge.
no, I completely agree with you, and I think that's actually in a very speculative way. I think this is very much the agenda of Facebook. And if you look at the past announcement that were made during the year, at the beginning they focused on building communities, and after building communities, they moved on to now, especially in light of what happened with Cambridge Analytica, they moved on to making data privacy a priority within their plan, right? Which I really do believe, and like if you couple these two aspects together also with the hard fact that you could use your Facebook account to register, to sign up and sign in so many services, just through your Facebook account. It's effectively becoming your digital identity. I would be hardly surprised if, 10, 15, 20 years from now, Facebook will become just a synonymous of like a digital passport or something that can prove your identity, through which you operate, through which you branch out to different services. Because in my opinion, it's much easier in a way, and it would become an enabler for other businesses. If the KYC is centralized, just the KYC, then each service provider will need to meet its own regulation. But nowadays, compliance plays a crucial role into, I don't want to say a burden because it's something positive actually, but it is very difficult for a lot of startup businesses to be able to, meet the KYC requirement, especially in this, if you look at challenger banks, and if you look at the entire fintech industry. So I think Facebook stepping in with Libra is a way to own that space, as you mentioned about the digital identity, and to provide a solution not just related to the adoption of cryptocurrency by the masses, but also in terms of like enabling future iteration of current services into so many different industries, but just using your account.
Absolutely. So if you think about it, if you look at the DLT space, I say that that's in current iteration 1.0, right? It's only going to be at 3.0, 4.0 where we see real value, real adoption, real trust, regulators getting comfortable with it, the ecosystem that supports it, like the off-ramping and on-ramping. Because what I mean is that moving money in and moving out, money out in the real world, where you've got operators prepared to provide services around that. Right now, there's a few brave people who are trying to find those solutions. I think we are there was one of those individuals that are trying to support the market and find solutions. But actually, with a serious degree of rigor, that's really applied, that says, but that doesn't compromise that we will not be robust around our AML practices, that are compliance and adherence to PSD2 or EMD, or
but you have an infrastructure, I think,
GDPR, whatever.
I think you're quite unique. I think your position in the market is quite unique. You have a wealth of experience. You have an infrastructure that you built in all of those years. I think your service as an enabler is extremely valuable. Because many startups that maybe want to provide for a new service or product I do not think enjoy the same benefit that you built and you own. Like it comes from effort. It doesn't fall from the sky. But I think new businesses are really struggling in meeting their KYC obligation, and not just KYC and AML, but also the larger portion of the regulatory obligation that is involved within like the provision of financial services. And as we chat before, I think what was interesting, like before the podcast, actually we had the chance to discuss this briefly. I believe that it's also very interesting because, as you just mentioned now, some people would just turn their nose up and declare the fact that they are not interested in Libra because it's stablecoin and it doesn't present investment opportunities. But that's why I believe that although the technology behind it might be debatable and controversial, I think what's important is that it has the potential to become a cryptocurrency, a currency and not an asset. Because right now, as we were saying before, some of the leading cryptocurrency or asset, as you want, such as for example the like of Bitcoin or Ethereum, I think a lot of people do not really find a currency. I don't believe they see them as currency, but more as like inexperienced one, as could be myself. They could see them as an investment opportunity, especially in light of the volatility that they have shown in the previous year. And I think that a mass adoption like the one that Libra has the potential to bring could really bring crypto asset or cryptocurrency, the whole DLT, into the mainstream and become a something that people could use to purchase goods and services over the counter.
I understand where you're coming from, and they're really good points. I think if I look at Libra, I think that's more akin to, if I look at traditional cryptocurrencies, more akin to Ethereum than it is to Bitcoin. And what I mean by that is, it's a platform to build from, and I hope that and see that that's where the benefits potentially come. Let's not think about what it is now and how Facebook will utilize that, but it would be for merchant acceptance, for everyday spend. That is the desire to allow money remittance to happen much more quickly and easier. But at the same time, it still needs to be something that is trusted, is frameworked around compliance with law and regulations that exist in wherever that takes place. But if you think about every Facebook user, if they decide to utilize this is the world's biggest retail bank overnight, right?
Absolutely, 2 billion, basically, almost.
Game changer. So this is a way of technology and technology companies forcing change in a more
lateral way,
ecosystem, right? And what we're doing is something very similar on a smaller scale, though. We were talking about it earlier. One of our customers that we're supporting in the DLT space is a company called Tap and Go, right? Now, Tap and Go are applying for their DLT license here, and they have a need to be able to facilitate that movement in and out of their crypto-based or DLT-based solution, and we're facilitating that through a debit card.
So similar to Coinbase, for example.
Just like the Coinbase one, right? So what we're trying to do is, our approach to this, just to kind of how to give some comfort about how we still reinforce that with what we think are regulatory controls and best practice, is we will only work with firms who are prepared in the DLT space to be prepared to be regulated.
Okay.
So this is about one thing that says, look, get a recognized jurisdiction and a recognized regulatory permission, whether that's a DLT specific a permission like is offered here in Gibraltar, whether that's an e-money license, whether it's a banking license. Some firms who are going straight down the banking route. It's about making sure that you're working in a reputable jurisdiction, you're prepared to take regulation seriously, you're prepared to comply with it yourself. And these are the conditions that help us get comfortable with working with what is still a high-risk area. And without that, I don't have the partner network or the supply chain to be able to support what I'm trying to do, because everyone wants to work with success stories. They don't want to be tied to failures, right? And there is going to be a risk of that, success rate to failure rate, in the early stages, you see more failures than you see successes. Absolutely. It's part of evolving an ecosystem, whether it's payments, whether it's financial services, whether it's cryptocurrency. To me, it doesn't really matter. That's just the way life evolves, right? So I think it's really interesting, and that's why I think Libra and what Facebook are doing in general, and the way that they've brought in the association partners and their commitment is very much about taking those steps to evolve trust in something that I think if people didn't believe in the DLT sector, then these companies wouldn't be involved. If people didn't, this isn't just because Facebook said let's do it. This isn't new. This has been around, but it's just been more challenging for the cryptocurrency type coins that are out there, stable coins, whether they were pre-stable coins but designed more for currency purposes rather than as investment assets or investable assets. Then nothing's changed. What's the difference with Libra? The only difference with Libra is it's backed by Facebook. It's got the branding. Huge amount of people. It's already got a ready-made customer base. So onboarding is less frictionless. But I think going back to that as well, this digital identity I think is an important point, because this single user sign-on using Facebook to log into all of these other apps, I'm not cool with that right now, because I know my youngest kid can set up a Facebook account, yet the terms and conditions say you have to be over 16, right?
Yeah.
So I'm sitting there going, but if a child can do that, then how much damage could somebody who is a real bad actor in the system do to that? So that's why I think that the digital identities online need to mature. So they need to take on the same secure customer authentication requirements that are adopted under PSD2 by European law. And I think, somebody like Facebook taking that step and saying, look, this is us doing it as a responsible technology provider, rather than this is us doing it because we're forced by regulation, will be a great way of allowing it to move forward and be adopted in a more mainstream way.
And I think in a way that could very much happen, because if you look at Mark Zuckerberg, for example, right? He has ties with political leaders from multiple nations. He recently been to France. Those type of ties will translate eventually in opportunities to provide for a product that maybe is provided in partnership with some government. I'm not saying that everyone would be happy. That would be, in a way, that's scary. It almost, you have the private sector that can draw data from the public sector. It's a bit of an overlap. It will be a very delicate balance. Nonetheless, by remaining positive, also it's not all bad. Something really useful, something really good could stem off.
Absolutely. This again goes back to the evolution point. So, for example, our tech stack is built on AWS.
The Amazon Cloud.
So the amount of things that we as a business can do now, as a business of our size, that we could not feasibly have done if we didn't have a solution which was cloud-based that allows the scalability at a cost-effective way, is superb. Right now, we're investigating artificial intelligence tools that they're providing, machine learning solutions for things like fraud protection, transaction monitoring. They recently came out with a solution called Recognition, which is using video camera solutions for surveillance and verification. Now, some local police forces were using it and got into trouble because it's challenged against an individual's
right of privacy and all of that.
Privacy and data rights and everything else. But that doesn't mean that recognition is a bad solution. Because can you imagine that for a customer verification solution?
No, that would be incredible.
It would be brilliant, wouldn't it?
No, absolutely. Plus,
why? Because you can download a fake passport online. You can download a fake utility bill. That's probably more likely to go through a bank system than somebody going, right, I'm going to have to get in front of a camera. I'm going to need to prove who I am. And I'm going to geolocate me to where I am. I can use, IP addressing was something the gaming industry used for a long time to be able to trace where their customers were coming from. And this was all driven by being able to prove your customer is who they say they are, right?
Yeah, individually, each of these is hackable, but if you combine them all together into a convergent product, then it becomes very secure. But if you look at like all of these, the new mobile phone, new smartphone use face recognition, the technology behind that is crazy. Like it's very hard to, from what I understand, it's very hard to fake it. And if you couple it with geolocation, as you suggested, if you couple it with other form of, with machine learning, perhaps, with the AI, it could become a real product.
I mean, there's a banking product I use, which is a mobile-only banking product out the UK. I've been using it for about 2 years. And 2 years ago, they were the first operator I dealt with that allowed me to log into my account by biometrics using my iPhone thumbprint, using my face recognition, but I had to blink to prove that it wasn't a picture or I was genuinely there.
So it's dynamic.
And the third one was voice. Because apparently your voice is one of the most unique characteristics that you can.
Although I've seen now, it's quite scary. They've done that. I think it's Google Assistant. I'm not sure, but they basically exhibited a demo of an AI that is capable of recording your voice, processing it, and then just speak with your own voice. It's extremely scary.
So you can understand with something like that, you need multi-factor.
Absolutely, right? Absolutely.
And underpin it with a digital asset that's portable, right? So that's my identity, and I choose who I share that with. Then I'm in control. So I'm protected. because I'm choosing what I do with it rather than anybody else making that decision for me. And I think sometimes this is where we've got is I think we're at this impasse now, and I'm hoping technology is going to keep pushing the boundaries and regulation is going to start coming closer to a middle ground that says, no, okay, look, we can come to an agreement on a common consensus around how we deal with KYC, how we deal with taking bad actors out of the ecosystem or identify them, because I don't think you can ever take out bad actors.
I agree with you 100%.
Right? You know, that's always going to be there. Just because you build something that's there for 99% of the population who are going to use it properly, there's always going to be that 1% that's going to is causing the level of focus that holds it back.
It's always the case. Like the child in the playground. Or
so then you've got to try and say, well, how can I build some kind of service offering that's still frictionless, or as frictionless as you can make it, but let's put some barriers in that maybe deter the bad actors. You know, that could be, you know, we've built out solutions, for example, where we've been early adopters in solutions where we've put really low limits. So in order for somebody to do something terrible or commit fraud at a significant level, it's a heck of a lot of effort for them. And that will just deter them because most fraudsters
that's
are
a good
lazy,
way,
right? But it's proving the concept, and as the trust builds, you open that service up, right? And you can only build that up by building a relationship. So if you bank with me, day one, I don't really know you other than I know I've verified you. But if you bank with me for a year, at the end of that year, I'm going to know what your spend habits are because I've seen it. I've seen all of this information, and as long as I'm in a position to be intelligent enough to review, assimilate that information and understand the risk of you as an individual, as a customer, using my regulated product, and as long as I'm happy with that, then we're good. And if I'm not happy with it, I can bring more barriers into play, right? Until I am comfortable. And if you were a bad actor, you would leave because I'm making it too difficult for you to operate.
Enough, it's not convenient to.
But a bank who comes in and says, well, we're just not going to bank you day one because you might be a bad actor is the complete, you know, extreme of the situation we're probably witnessing now. And that's where we're trying to play a part to try and support accessibility to financial services, but still in a controlled environment and in a compliant environment. And that can equally apply to DLT companies that we're working with and facilitating with card programs or banking or payment solutions, but it could equally pertain to just your traditional businesses and consumers that are just not being serviced effectively today. And I'm pleased to say we're not the only one. You know, there's companies out there like us who are really, you know, part of their core strategy is about providing solutions and services where there is a significant gap.
I see. We spoke a lot about Transact payments. We spoke about the fintech industry. We spoke about the traditional banking industry. So give us a little bit of background. This is unusual. Usually we start with the background of the person we're having on, but like just to spin a bit and things like. So you mentioned you're not from Gibraltar.
Yeah.
So you're coming from the UK, from England. And just give us what brought you to Gibraltar? How did you become the managing director of Transact Payments? And what is the future holding for you? What are the projects?
So my background, I was born in the UK. I was born in a city called Leicester. My
wife is from Leicester.
Really? Small world, right? So my father's originally from India. My father was born in India. My mother was born in Fiji. So I'm a real mix, I guess. I was born and brought up in Leicester. I went to the university in the north of England, and I studied a degree in IT. So my background is, or my desire growing up was to be a technologist, I guess. What I quickly realized is I wasn't very good at coding. And then when I graduated, the only jobs available were for programmers. What I really liked was working between the technology aspects and the business. And I was fortunate enough after I graduated to work for a building society in a sales role. And that accelerated quite quickly to me being promoted into a role within the head office. And there I got to sort of exploit some of my business analyst backgrounds, my project management skills, focused around building IT solutions. So
you resonate a bit with Transact in being an enabler between
I was
between
fortunate.
2 different spheres. So
I was fortunate that the path that it led me to wasn't the one that I thought it would, but the opportunity it created was very much about being able to be very solutions focused. Actually, the companies we worked in were all called solutions, and they had the names, they had the word solutions in them. I was fortunate enough to be managing director of 3 of those. One was a mortgage processing outsource division, providing UK underwriting rules for expats buying property in the Middle East, predominantly Dubai. And we used technology and workflow to deliver that. The second one was I held a head of IT role for an outsourced online savings and banking solution that we sold and white labeled for the likes of Capital One, Santander, Alliance and Leicester, Bradford and Bingley, a number of different operators. And the third one, I was managing director of a company that sold our core banking software and parts of our banking software to other banks and building societies. So early, I got to use my technology background and keep my technology background, but actually develop solutions to take to market for other financial institutions. So that's my background. That's what I've done, and I really enjoyed it. In 2010, I had built the largest electronic money institution in Europe, the 5th biggest in the world on the MasterCard brand, operating prepaid cards. We sold that to a German bank. And at that point, I thought it was an opportunity for me to try and do something new. I'd been within that company structure, running multiple roles for 13 years, so it always felt fresh and challenging. But at that point, I thought, I want to stay in the electronic payments business. This is something I really love. The business had been sold. I could have stayed with the new company, but I felt I needed a fresh start. And had the opportunity and had an offer to work for a Gibraltar-based company in Transact. So I started as sales director, quickly became sales, marketing and operations director, to try and impart some of my experience on a broader scale, which was then a few years later sold to a US bank. And we were under the ownership of the US bank. And at that point, I was invited by the US bank to take on the role of managing director or CEO. So at that point, I spoke to my wife, and I've got 3 children. The first time they offered me the role, it wasn't the right time. My daughter was studying in the UK in the middle of exams. The second time they came back, they were persistent, and I'm pleased they were. And the second time they came back, I spoke to my family, and we said, look, why not? Let's do this. Yeah, it makes a lot of sense. We came out with only really myself having spent some time in Gibraltar, back and forward between the UK. But that was back in 2014, and it's been unbelievable. The culture, the lifestyle, the fact that I can sometimes finish work late and feel guilty, but I can ring my wife up and say, come on, we're going to go out, I'm going to buy you dinner. And the kids can come out. Back in the UK, the weather doesn't really relate to that, other than maybe if you're lucky 4 weeks in the year, right? So I love the weather. My family, the children are settled. My wife is settled. And for me, I always think I can work from anywhere. I do a lot of traveling. In the last month, I've been in 4 different countries on different business projects. So, it's great. Gibraltar is a great location to live. It's a great place to do business from, and great people. I mean, I feel now, fast forward from my time when I moved in 2014 to now, I feel part of the community. My family do. Biggest challenge here is I was running late here. Is every time I go from one place to another, I am now stopping every 100 yards to stop to say hello to someone, right? Yeah. So, and that's such a fantastic feeling as well. It's a safe place for my children, but it's a secure place to build a business, and it's a supportive place to build a business. So that's where we find ourselves, and that's why I'm here at Transact. And where does Transact go from here, or where do I go from here? Well, hopefully, we both grow significantly into an even more successful business than we are today. To put some context in, since April of 2017, we've gone through double on growth from a revenue, client growth point of view, and services wise, we've diversified our product into the banking and payment solutions as well as the traditional card payments that we did. 60% of our portfolio today are regulated companies. So we've de-risked our relationships. Traditionally, all of our clients were fintechs without any regulatory permissions. So,
and how was that achieved? Was that achieved because now there is regulation that covers specifically fintech activities that revolves around the fintech industry? Say, for example, the distributed, the DLT regs here in Gibraltar and like other jurisdiction, or was it because the type of businesses that approach you are not only coming from the fintech industry?
It's a bit of both. So
Okay.
DLT for sure. That's a new regulatory framework that's come into place in different jurisdictions, not all jurisdictions. It's not Europe-wide or worldwide at this point. But so yeah, that is a new area of regulated activity. But actually, it's the traditional ones. You know, we've had more banks sort of realise it's more cost-effective and it's more efficient and it's more reliable a service to outsource to somebody like us who are 100% dedicated to it than to do it in-house. There's also institutions that just don't have that expertise. They see payments as a byproduct of their core offering. I don't think a bank sees payments as a core offering. I see a bank's core offering is onboarding customers and selling insurance, savings, mortgages, and as many financial instruments as you can to them.
Yeah.
The fact that you have to onboard them with a loss-leading payment product is a byproduct of what their core offering is. So if they can outsource that to somebody whose sole focus is payments,
who's able to,
that's got to be a proposition worth considering, or at least having a conversation on. And I guess what's happening is the world is changing. People are looking at collaboration and partnership, whereas before it's always been let's just do it in-house, whether we do it well or not. And I think hopefully that's where the future of financial services and technology as it pertains to supporting financial services will go, is that there'll be more partnership. There'll be more fintechs who are working with more traditional operators, and the end result is the consumer gets a better deal.
Yeah, the one benefiting at the end of the day, at the end of the chain is the consumer.
Yeah, exactly.
Okay, so I'd say that we pretty much covered everything so far. Thank you so much again for coming. It was an absolute pleasure having you on Blockchain Rock. We hope to see you again soon. Hopefully you'll come visiting us again in a few months, and you'll tell us all about how this month have been for Transact.
Thank you very much. I really appreciate it. It's been a really interesting conversation, and look forward to following up sometime in the future as well.
Thank you very much.
Thanks.
Bye.
Bye.